Hey, hopefully you guys can hear me and see me. I got some important stuff I want to talk to you about today. It is Monday, happy holidays, and we've got some pretty cool stuff coming up, but this topic is a topic I get asked all the time. And that is, hey Zach, my market's not doing too well. How do I pick another market? What do I need to be doing to identify and to pick other markets? Also, we refer to this as virtual investing. And a lot of times people think virtual investing is just for wholesaling, but it's really not. And virtual investing is just a term that just simply states that you're going to invest in other markets virtually from home, wherever you live, and that market could be anywhere in the United States, or if you live abroad, it could be you investing in the United States. And so I want to take some time to break down 4 things that you need to be doing first. There's 4 of these. For the purpose of this video, I want to talk to you about virtual investing and what are these 4 things that you need to be doing first before you move into any market. Number 1 is market research. It is vital that you do market research so that you know what you're doing. Is the market going to work for your strategy? For example, if you're going to be wholesaling, well, you don't want to go into a virtual market where there are no cash buyers. You want to do your market research. You want to identify what that market looks like. You want to then dig a little deeper and find out where the buyers are and where are the buyers buying so that you know where to target. We're going to talk about this in the training. Or maybe you're just looking to do virtual market or invest in a virtual market to just build better wealth and create more cash flow and have a higher return on your capital that's being spent in other markets. Well, then we need to do a little bit of market research to identify where those areas are where the best rental properties are at. What is the vacancy rates? What's the population growth? This can be broken down into really getting clear on what we refer to as a zip code matrix and cluster zones. So number 1 is market research. Number 2 is you have to understand what these 5 economic indicators are. And you might say to me, but Zach, what is an economic indicator? Well, an economic indicator is just that. It is what helps us know, is that market stable? Does it have long-term, growth? Is the economy strong, or is something not looking really good right now for that economy that could create an economic downturn that could leave you in a bad investing position? So those 5 economic indicators are: what are new businesses doing? What's the per capita income? What is the apartment occupancy rate? Also, what's office occupancy rate, and what are the building permits doing? We get real clear on those 5 economic indicators, we can really understand what the economy's doing in the market we're researching, that we're moving into as investors. Now, number 3 is you gotta build the right team. The team, you remember, real estate investing is a team sport. And you need to get real clear on that. It is a team sport. So you need a team because they're going to be your eyes and ears on the ground. For example, let's say that your goal is to start working as you're going to go in and start buying more wealth assets. You're going to build cash flow. Well, you need a team. You need obviously a handyman. You need obviously a property management company, and a good agent would be a good starting point. They're your boots on the ground. They're going to be out there helping you and giving you a lay of the land. If you're wholesaling, well, you might want to team up with another wholesaler. You might want to get real clear that there might be a junior wholesaler in that market that can be your boots on the ground, that can go look and help you identify if the deals and are things working together. But you got to get the right team in place. And then ultimately, number 4 is you got to put systems and resources in place. You cannot invest virtually without having systems and resources in place, because you need to be able to move into those markets. And one of the key factors is having some form of platform that can help you invest in that market by extracting data, figuring out what things are selling for, and being able to do it efficiently on your own. It's difficult when you're trying to invest in a virtual market and They are a non-disclosure state. Those markets become very difficult for us as virtual investors because we just can't get a lot of the data that we want on our own. So I tend to stay a little bit away from non-disclosure states unless I already have boots on the ground. I have an agent there and they can get me the data that I need. So anyways, that's the 4 key things that you really need to be thinking about if you're going to pick virtual markets. Hope you got some value out of this. Bing, 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 bing. See you guys soon. Bye now.